Good evening, everyone. Good evening. I'm just trying to confirm if you can all hear me.
Good evening,
Can you
sir.
hear
We
me?
can hear you.
Good
Maybe I
evening.
can hear you.
Good evening. Good evening, everyone. Thank you for joining us. Welcome to Starry Gold Academy revision class for the preseen question. Okay. Okay. So, um, first of all, I would like to appreciate every one of you that is here. And more importantly, I will have to appreciate Starry Gold Academy. I guess for this preseen review class, this is the first time we are using Google Meet. And also, uh, they have given me a go ahead and approval to use the suggested tips prepared. Before, what we used to do is to just share some tips on Telegram, but this one I'm going to be showing us the things, the calculations, and all of that we've been able to do, and that means that we are going to. I'm not sure we'll be able to finish all that we needed to do today. Also, by 9 o'clock, I will need to take a 30-minute break. By 9 o'clock, I will take a 30-minute break. I'll come back by 9:31. Precisely 9:31, I'll be back. So we will take it till like 9:40 thereabout, so that I can allow people to go and rest. Then if there are some questions, drop your question on the Telegram platform. I will answer them. Then on Saturday is our live class again. We're going to continue. Tomorrow, Friday, if you have questions, drop it on the Telegram platform. I will still answer them. But we are going to come back to this Google Meet platform again on Saturday evening to finish up everything that we have to do about the preseen, the calculation, all the things, because there will be quite a number of things I'm going to be saying. So I would like us to pay a close attention to them. So, like I said, I want to appreciate our MD, Mr. Tayo Steven, and the entire team of Starry Gold Academy for this golden opportunity and for creating this platform of study to help students. So I want to appreciate and also thank God for giving us the strength and giving each and every one of you also the opportunity to be here this evening. So I want to say thank you for joining. So we'll go straight into the live question, into the preseen question. Try to jot as much as possible. Drop your question on Telegram. I have my phone with me. If you have question, drop it on Telegram. Then we are good to go. So thank you very much. Let's start. Okay, so let me share my screen. Let me share my screen. Um, okay, so I'm going to be starting with this. Okay, so I hope okay. Yes. So can you please confirm if you can see my screen? Can you please confirm? Can you see my
Yes,
screen?
I can see your screen.
Good.
Yes, yes.
Oh, thank you. You can see my screen. Thank you very much. Okay, so starting this, looking at this preseen question, um, where we are going to start this diet is from exhibit 1. The industry, the industry that we are dealing with is hospitality industry, hospitality business. Meanwhile, the client itself, they are into the sales of manufacturing and sales of conventionaries. So you will see that is those things I've put there. Then we are talking about hospitality industry. Now, the reason why is that, first of all, you need to know the industry. Which industry are you in? so that when you are talking, it's good to have the understanding of the industry. Then secondly, in this question, you are audit trainee. Then your line manager is Mr. Julius Idemudia. Mr. Julius Idemudia. Mr. Julius is your line manager, is your boss, and is can mute yourself so that we can all your employer. Your employer is Osayeme Adelowo Chukura. And your own name and the client of your firm is Spicy Conventionaries Limited. Spicy Conventionaries Limited. Now look at it. The conventionaries is plural. Don't get to the exam and go and write conventionary without the plural. The Spicy Conventionaries Limited. Take note of that. This professional exam. They pay attention to everything you are writing. It's very important. So that is the first thing. Now, before we go to the second phase, are you with me? Can you all hear me?
Yes, we can.
Good. Let's continue. So I want you to, if you have your question with you, you need to turn with me to Exhibit 1. Now, I want to draw your attention to certain things. In the Exhibit 1, you say the question says that your responsibilities include. So now, first of all, I want you to know that the two requirements of the question will be drawn from this aspect. And I'm going to be drawing our attention into it before we go into the question fully. Now, he said that your responsibility include, number one, preparing detailed financial analysis and report on the performance of the firm's hospitality clients. That is, they are talking about Spicy Conventionaries Limited. So your number one responsibility is to prepare a detailed financial analysis and report. Number two, another responsibility is that analyzing your client financial statement. Analyzing your client financial statement to identify area of weakness, providing solution to correct the anomalies. Now, underline identify area of weakness. So the key point to know in number one is that you have a responsibility to prepare detailed financial analysis and your client financial statement. In the analysis of the financial statement, you are supposed to identify area of weakness and provide solution to those weakness. Number three requirement. You have to assess the operational and strategic business proposal. I'm going to be showing us where I think, we don't have all the facts with us now. But based on the facts and figures that we have with us, we can make deductions, we can deduce, we can make inferences as to what could they possibly be talking about. You understand? And that is what the examiners, that's what they expect us to do. They expect us to anticipate, speculate what question can come out from this preseen question. Now, number three say assess the operational and strategic business proposal to see how each align with the client objective. Take note, aligns with the client objective. So number one, you need to know what is the client objective. That is, take note, you need to know what is the client objective. Look at the next one. It say, and its impact on its business and financial risk. So take note, you need to know the impact of the, you are supposed to assess this operational and strategic business proposal and see how this proposal, how it align with the client objectives. So I said, number one, you need to identify what are the objectives of the company, the client company, which is Spicy Conventionaries Limited. Next one say its impact on the business and financial risk. So you need to identify what are the business and financial risks that are involved in this question. We are going to see all that too. We are going to see the financial risk, we are going to see the business risk and the impact, and be able to say, okay, what impact could this thing have on the business? So take note of that. Those are the things we are going to be touching when we go into the solution tips. Okay, then number 4, look at it. Number 4, assessing the client financial and business forecast. Assessing the client financial and business forecast together with the assumption upon which they are based to form judgment, conclusion and recommendation to the client. What I want you to underline in this number 4 is that you are supposed to assess financial and business forecast. I want you to note this before we go ahead. The forecast, now this place has told you that in the unseen, if you look at this question, we were given financial statement covering only 2021 and 2022. But if you look at the market, if you look at the market that is exhibit, if you look at exhibit if you look at exhibit 3, we are going to look at exhibit 3. That's why I said that a lot of things we need to set. I'm not sure we can finish it in this, but let's continue now. So I want you to take note that you are going to be required to make a forecast in the exam, and the forecast will extend up to 2027. So you are given only 2 years. You are going to be required to forecast for the next 5 years, which is going to end in 2027. So expect a forecast. One of your responsibility is to what? To assess the financial and business forecast. For which period? The period is from 2022 to 2027. That is, the 5 years is starting from 2023, 2024, 2025, 2026 and 2027. That is the 5 years. The question will likely require you to make a forecast. And one of the things, that is when we talk about cash flow budget. Cash flow budget can come out, or cash flow statement, in form of making forecast, or you might just be giving some information that you should make a forecast. Now when we get to the financial aspect, you are going to see, because one of the things that will help you in making forecast is to look at it and say, in 2021, what was their performance? In 2022, what was their performance? How have they been able to grow? Even with that 2 years, you should be able to extrapolate. You should be able to estimate and say, if they can do this thing between this year and this year, then it means that, and I'm going to point your attention. Let me quickly point your attention to something. So that I won't forget. Look at something. I'm going to point your attention to this quickly. So that I won't forget. I'll quickly like to point your attention to it, so I won't forget. We're going to get there, but because I'm talking about forecast, let me quickly point attention. Look at something. Exhibit 3. In exhibit 3, I'm going to point your attention to this. Turn with me quickly to exhibit 3. That is page 8. Now, they told us that the global confectionery market in 2029 and is projected. The market is projected. That is the global market. Now, the global market is projected to increase to $270.5 billion in 2027. They now said that, look at it. They said that an annual growth of 3.6% is estimated. an annual growth of 3.6% is estimated. I will point your attention to something else. Look at, let me see, this is paragraph 1, 2, 3, 4, 5. If you go to paragraph 5 on page 8, exhibit 3, look at it. They said Nigerian conventional market has been projected to grow at a compound annual growth of 9.8% of 9.8% over the analysis period of 2021 to 2027. 2021 to 2027. Now, what they have done here, they have given you the expected annual growth of global market. They have given you expected annual growth of local market, which is Nigerian market. Don't forget that Spicy Conventional Limited is a Nigerian company. They have their base in Lagos and in Abuja. Now they have given us both at the global, and those are the two markets we should be looking at, because that is where we should be focusing on. That okay, those are the things we are still going to touch. But I quickly mentioned that because we are talking about forecast, and to draw your attention to the fact that most likely you will be required in the exam to make a forecast up to 2027, because an annual a statistics and empirical data has been given to you, and you are supposed to use that empirical data or get your own empirical data from the calculation and from the information you have been given to be able to extrapolate. Because if I know the percentage growth annually, then in the next 7 years I should be able to say, look at it, they say on compounding basis. So it means that in the next 7 years I should be able to extrapolate and say this is what the figure will be in 2027, because they have given us the annual growth. They've given us annual growth. So it's very simple. Even without any just simple calculation, we should be able to say this is what the market will be doing in 2027. So most likely, you may be required to do what? A calculation, a forecast. And also it has been mentioned as part of your responsibility, that your part of your responsibility is what? To assess the client financial and business forecasts. So that is that. So that's that. We will move away from that. I'm moving to the next thing, number 5. I've gone back to exhibit 1 now, number 5.5, exhibit 1. Look at it. It said advising your client on the strategic tax planning, strategies for optimal tax liability. Hello.
Yes, sir, we can hear you.
Okay, I just want to be sure you can hear me, so that I know that I've not been disconnected. Okay.
We can hear you, sir.
Okay, great. Let's continue. Now,
We can hear you.
oh, thank you. Now, they say advising your client. Now, about what? You are going to advise your client on strategic tax planning strategies for optimal tax liability. So now what that means is that tax liability, what are the strategies that you will advise? So meaning that as you are reading decision, tax implication of certain decision in the question, we are going to get there, but I'm going to come back to them one after the other. Let's look at number 1, 2, 3, 4, 5. Then number 6 is just talking about drafting report for your boss based on operational and strategic business analysis to carry out. Now, next one, let me look at it. Look at this statement. Please pay attention. It says this responsibility demand that you keep abreast of development in accounting, developments in accounting and taxation space and hospitality industry and the hospitality industry. That was where I first know that okay, the industry we are talking about is hospitality industry. You say both nationally and internationally, to be able to carry out your task effectively, Now, because of this statement that your responsibility demand that you should keep abreast development in accounting and taxation. I'll quickly say something. I want us to take note. One of the new developments in accounting in the recent time is IFRS 18. IFRS 18. And I'm going to, when we get to the calculation, there are certain things I have seen in the calculation that is a pointer. So I will first of all explain this IFRS. I will just give us summary. When we get to calculation, I'm going to draw your attention back to this IFRS. So you need to be equipped with what IFRS 18 is saying. Now, let me quickly just give us a brief before I continue. Now, IFRS 18 is on presentation and disclosure of financial statements. We are doing this thing because they say your responsibility is to keep abreast the new development in accounting and taxation space. That is why I'm going to this place. Now, IFRS 18, it talks about presentation and disclosure of financial statement. Disclosures in financial statement. I want you to take note that this IFRS 18 is meant to replace IAS 1. Is meant to replace IAS 1, and the act was issued on the 8th of April 2018. Will be effective. We become effective. We become active on 1st January 2027. 1st January 2027. That is when it will be effective. From 1st January 2027. Now, but however, people are allowed, people that are early adoption is allowed. People that do not want to wait till 2027, that they want to start adopting it, they are allowed to do so. Now, what are the issues that IFRS 18, what are the issues to resolve? What are the issues? Number one, the new IFRS is to resolve where to classify income and expenditure, as in the appropriate way to classify income and expenses in the income statement. You know that a standard directs us how expenses should be classified, whether the expenses should be classified by nature or other way. So take note, number one issue that this standard has come to solve is where to classify income and expenditure, income and expenses in the income statement. Number two is to resolve lack of clarity on what should be subtotal. Now, like what that means is that, oh, am I supposed to, what should I group? Normally now, if you look at the financial statement, there is distribution and marketing, they group them. There is what other cost, admin cost or admin expenses, they group them. So they are saying that we don't want anybody, even if you are grouping a certain expenses as an admin cost on your financial statement, that must be uniform for every company. that is adopting that system, or every company that is in that line of business. That is what they are saying. It should not be different. There should be consistency. That we are coming back. So number 2 issue is that lack of clarity of to subtotal. What should constitute a subtotal to be presented in the P or L account, to be presented in the income statement. Number 3, the standard has come to resolve how to group information, presented in the primary financial statement, or information to be disclosed in the notes to the account, in the notes to the financial statement. So how to group them together so that auditor A will not be grouping in a way that is different audit firm. You understand? And you are meant to look at the financial statement of your client, Spicy Conventionally Limited. Now, let us, I'm trying to rush, give you the key points. I don't want to bore you too much. Just trying to give you the key points, what the standard is all about, so that if you grab it from here, you may not need to go and read the standard, or you can still just flip through the standard just to have an idea. Now, change that IFRS 18 on presentation and disclosure in financial statement. And you know the reason why we are clarifying this thing. If you look at number 1 requirement, responsibility under Exhibit 1, he said prepare detailed financial analysis and reports. You must understand what is the new standard saying, because they can just ask you. So that is why we are paying attention to this area. I want you to get it. I'm not going out of point. Now, so that's number 1. So the changes that has happened, say presentation of a newly defined subtotal in the income statement. That is number 1 changes. Presentation of newly defined subtotal. I have explained the meaning of subtotal. What should constitute a subtotal in your financials? You will see that income or revenue is a line item. Cost of sales is a subtotal. Distribution and marketing is a subtotal standing on its own. Admin is a subtotal. Taxation is a subtotal. Let me quickly mention this. If you look at the financial statement you are given, you will see that they mention finance cost as a separate line and taxation. Now, in some questions, they may not give you finance cost, they will just merge it together with other. This one, because of this new standard, this is one of the primary fundamental requirement of the new standard, that when you are preparing a financial statement, finance cost must be a subtotal. Finance cost must be on its own. It must be clear on the face of the financial statement. This is one of the new developments in accounting, and they have stylishly factor it in the question look at the question that is given on Exhibit 4. If you look at the information on Exhibit 4, summarized financial statement, when we get there, I'm going to show you. So they've already coined it there. So if you don't know this is what the new standard says, you will not be able to appreciate what they expect you to do in that area. Now, so number 2 thing, I've gone back to changes now. So I said that number 1 changes that IFRS 18 has introduced is presentation of newly defined subtotal in the income statement. Okay, also he said that, okay, let me read this. He said that company is now required to present operating profit. That is, company in their financial statement now, they are required to report or to disclose operating profit or loss separately as a subtotal. They are required to disclose profit before finance. Get it to? They are required to disclose operating profit. That is why if you see my calculation, that was how I followed it. There is operating profit. There is profit before finance costs, and there is profit before taxation. They are two different things. Profit before finance cost. And when I was studying, I now saw, wow, this is what they are saying. That is the changes in the new standard. That is that, because I was wondering, I look at the past question. Oh, in the previous question, how were the financial information, how was it given to us? I now look at this one, I say, this is where they are going. This is the area they are talking. So take note. They said that one of the new changes that the companies are now required to present operating profit as a separate line item. That's number one. Number two, profit before finance costs. They're supposed to disclose it separately. Profit before and profit before finance costs, and profit profit before tax, profit before finance costs, and profit after tax. So if you look at the four profit I've mentioned, it could be profit or loss. It could be profit or loss. So they are all in the financial you are giving in Exhibit 4. Now I will move on because of time. Let's save time. Now I want you to take note to something else I want to say. One of the things that the new standard IFRS 18 is that it provides 5 categories of income. 5 categories of income. Number 1, operating income, investing income, financing income, taxable income, and discontinued operation income. Discontinued operation income. Those are the 5 categories of income according to IFRS 18, the new standard. Now, I will move
Please
away
come again about the categories, sir.
about the 5 categories. Take note. He said that IFRS 18 has come to provide 5 categories of classifying income. 5 categories of classifying income. Number 1, operating income. Number 2, investing income. Number 4, taxable income. You know that for tax purpose, what you need is taxable income. But we will get to all of that. But take note, taxable income. Taxable income. Taxable income. Then number 5, discontinued operation. Income from discontinued operation. Income from discontinued operation. Take note of that. Now let's go on. Another thing that the standard has come to introduce, the guidelines and
Hello, sir.
requirement. Hello.
Can you repeat that number 3, sir?
Number 3, okay. I said the standard has introduced or provided 5 categories of how income should be classified in the financial statement. Number 1, operating income. Number 2, investing income. Number 3, financing income. Number 4, taxable income. Number 5, income from discontinued operations.
Okay, sir. Thank you, sir.
Then next thing, let's say guidelines and requirements for identifying. Now, take note. The next thing, another thing that the standard has come to introduce is that you know that before now, when you look at the financial statement, you may not be able to tell. But that is one of the limitations of financial statement. Inability to tell management efficiency or management performance. You will not be able to tell looking at the statement at a glance. But this is one of the new things that the IFRS 18 has come to introduce. Now, they said that the news requirement is that your financial statement should give guidelines requirement for identifying management performance measures. Identifying management performance measure and disclosures on management performance measure in the notes to the account, that there is need for you now to identify the criteria for management performance measure, and these measures must be disclosed in the notes to the financial statement. Must be disclosed in the notes to the financial statement. So he now went further. I'm rushing, so that we can quickly leave this area. He said that each management performance measure must describe aspect of financial performance that it communicates. Number 2, how the management performance measure is calculated. Number 3, reconciliation between management performance measure and comparative subtotal that are listed in the financial statement. And number 4, how the company determine income tax effect. How the company determine taxable income effect or income tax effect. Now, don't worry, this thing is in the I'm just mentioning it so that I want us to save time. Another important thing I would like before I will leave this area now is that the IFRS 18 says that the standard requires that some organizations are required to disclose specific expenses. They are required to disclose specific expenses by nature. That is, their expenses are required to be classified by nature, and it should be disclosed in the notes to the account. So, what are the classified expenses that must be disclosed? Depreciation, amortization, employee benefits, and if you look at the financial statement we are given in Exhibit 4, they were particular about employee benefits. I'm going to link it together for you, because employee benefits of the way you can strategically minimize your tax liability is to invest more in employee benefits. What the standard says now, that is Pension Act of 2014, what it says that minimize your tax liability, because the 10% pension contribution is an allowable deduction for tax purpose. It's an allowable deduction for tax purpose. Even in calculation, even in payee, even in calculation of pay as you earn, pension is one of the allowable deduction. Even for the corporate organization, pension contribution is one of the allowable contribution. Even employee benefit obligation that you will pay employee in the future is one of the allowable deduction for tax purpose. I'm linking it together so that you can get, because when you get to the financial, you need to understand why certain figures are put there. And they expect you to say something on it if you really understand the case study. Let us continue. So the standard says that one of the disclosures specified specified expenses by nature, to disclose specified expenses by nature in the notes to the account, And those specified expenses are depreciation, amortization, employee benefits, impairment losses, impairment losses, or written down. Don't forget that impairment losses is also an allowable deduction for tax purpose, even when you are computing income tax liability. When you are company income tax liability, impairment is one of the allowable deduction. Then next one is what? Reversal on impairment losses. Reversal on. So I want you to take note of that. Impairment losses, reversal on impairment losses. Reversal on impairment losses. And the last one is reversal on written down of inventory. Reversal on written down of inventory. I want you to take note. You see the reason why I was energetic about reversal. Look at it. If you look at the financial statement that we are given, if you look at the financial inventory, I have done a calculation. If you look at the inventory alone took 26% of the current assets. That is, in 2021, inventory is 125.5 thousand, and it is the 26% of current assets of the company in 2021. In 2022, inventory took 32% of the current assets. So I have taken time to calculate the percentage, because out of 100 you're already at 32. Are you getting it? For you to know how it's material, to pay attention to it. And I'm linking that to the requirement of the standard for us to be able to understand the flow. Now, I'm going to stop here for IFRS 18. I'm going to stop here. I'm going to go into other things. Now, other thing I'll quickly talk about before we continue is about that place where they say strategic tax planning. I want you to take note of the following I want to say. One of the ways that you can strategically strategies for tax planning, strategy for tax planning. I want to give you some points on that one. Just take note of it. I want to give you point on that one. Take note of it, and we are going to move on. Okay. So number one way of strategic tax planning strategies is understand the tax system. Understand the tax system. They may ask you, or it will be part of the key. You must understand the tax implication. Understand the tax system. What does that mean? Let me quickly give you an example. They have told us that the company operates business in Lagos and in Abuja. In Lagos, when you are into conventional or consumption goods, you are going to pay what is called consumption tax. I am not sure consumption tax is payable in Abuja, but it's payable in Lagos. And the company is located in Lagos and in Abuja. So I want you to take note of that. So that is why you must understand the tax system. That in the region where my company is located, what are the taxes that are applicable? Because you cannot dodge the tax. That is why they say you as an auditor, you are the client, you want to advise your client. What are the strategic tax planning measures would you advise your clients? So number one, you must understand the tax system. Number two, you must understand the business structure. You must understand the business structure that Spicy Conventionally Limited, they have stores. We're going to get there. They have stores. And that store, look at it, they have 30 owned store and they have 20 franchise store. That is 20 store that they are franchise, and they have 30 that owned 3 owned store. That is 30 owned store, making 50 altogether. That is the That is the stores. And this is one of the questions that will come out from requirement 2 about the business proposal. They're about to take a business proposal. And one of the business proposal they have identified is that they have to go through means of distribution, and they are going to use their stores as a medium of achieving that objective. I'm going to draw it when we get to the objectives of the company. I will draw your attention back to this area, but I want you to be linking the points together. That's why I'm drawing our attention to. I want you to link the points, begin to link it together, so that you will know, oh, why they said this in this place was because of this. That's why I'm drawing our attention to it. Now, so where we are now is that I'm giving us the tips on strategic task. I have mentioned number 1, you must understand the tax system, because the tax system is structure, optimal business. You must understand the business structure. The business structure that the company is operating is already given. It's already given. So what that means is that you must be able to understand the 2 structures that were given in the question, and look at the tax implication of the decision. That if we go by this structure, what is the tax implication? If we go by this proposal, what is the tax implication? Now, next thing, tax incentives and exemptions. Tax incentives and exemption is another strategy you must take note. Deduction and allowances. What are the likely deductions? That was why I mentioned about employee benefits. I mentioned about employee benefits. These are consolidated relief allowance. You know, these are reliefs that are, so just take note. Investment in approved sector. Investment. Hello, can you hear me? Hello, can you hear me?
We can hear you.
Okay, investment in approved sector. Investment in approved sector. So what this means is that one of the strategies to reduce your tax liability is when you invest in approved sector. There are approved sector that investment is allowed. You understand? And that is in Schedule 5 of company income tax. Schedule 5 of company income tax. You will see donations. Is allowed. Law, and it's one of the strategies to reduce your tax liability. Let's go on. Next one is capital allowance. Next one is employee benefit. I've mentioned
sir.
That one. Yes,
Hello,
sir.
sir.
Yes, sir.
That five schedule.
Yes.
Schedule 5 of company income tax.
Company income tax. Yes.
The network does not allow us to hear you clearly.
Oh, okay. Can you hear me? Can you hear me now?
We can.
We can hear you, sir.
You can hear me. I can continue, Abi. Can I
Yes.
continue?
Yes, sir. Yes,
okay,
sir.
So I've mentioned Schedule 5 of company income tax. Take note of it. That's where the investment in approved sector. Those are the approved sector.
Okay, sir.
Capital allowance is another way. Capital allowance, employee benefit, employee benefit, transfer pricing compliance. Transfer pricing compliance. Those are the few strategies I've put together. Strategies. So let me see. Okay. Additional strategy I put here, I say leverage on tax relief for life insurance. Leverage on tax relief But this aspect has to do with this aspect I'm saying now has to do with employee tax. Employee tax, that is payee, pay as you earn. That is PITA, personal income tax, computation of personal income tax. This aspect I'm about to say now, it has to do with that one. Okay, so leverage on tax relief from life insurance. If you pay life insurance is one of the allowable deduction for tax purpose. Increase your pension contribution. Increase your pension contribution. I've already said that. If you increase your pension contribution, it's another way to reduce your tax liability. Don't forget, the question say, how will the company achieve optimal tax liability? Optimal means the minimum, the barest, the most inefficient way that you can bring down the tax liability to the minimum that the company should pay. That is the optimal. The word optimal tax liability, that's what it means. Okay. Now, another thing I put here, participate in National Housing Fund. National Housing Fund, or NSITF. National Social Insurance Trust Fund, NSITF. I also put here, apply for consolidated relief allowance. That one is, I've said it. Consolidated relief allowance is also part of it. Create deferred tax account. Creation of deferred tax account. I'm going to stay much on this later when we go deferred tax. And deferred tax is is in the financial statement that we are given in Exhibit 4, deferred tax. So I want you to take note. Your deferred tax is another way you reduce your what? Your tax liability. And it's part of the information we are giving in Exhibit 4. So you are going to see it so that deferred tax account where earnings on investment are not taxed the same year. So then I've mentioned donating to approved charities. I've mentioned that one. Donation to approved charitable or approved organization. Okay, so that is from tax. I'll quickly mention this. Please take notes. When we talk about reducing your tax, you must understand the tax. I will be fast about it. We have direct tax, we have indirect tax. Under direct tax that affect this company, you have income tax. We have income tax. We have education tax. We have withholding tax. Because before you can advise your client about strategic tax planning, you must know what are the tax that are applicable to the company you are about to advise. So you must know the taxes that affect the company, that they cannot dodge it. Remember, the company is located in Lagos. In Lagos now, it is difficult to evade tax. It's difficult. So we chase you down. So it's difficult. Now, you must know the taxes. So when we come to direct taxes, we have company income tax, education tax, withholding tax, capital gain tax. Then we have indirect taxes, that is VAT, value added tax, stamp duty. Then for Lagos State, one of the taxes, indirect tax, is consumption tax. So Lagos State collects consumption tax. Then business premises is another one that is payable to state government. Business premises, development levy, land use charge, and social economic development, land use charge, development levy, business premises, consumption tax. These are all taxes that are payable to Lagos State government, LIRS, Lagos State Internal Revenue Service. Please take note. VAT, that one goes to federal government. Stamp duty to federal government. Please take note. Now, I'm going to leave that side. I'm going to leave that style. I think we have been able to do kind of justice to that. Now, let's go back to. Hello, are you still there?
You are still there.
Yes.
Can you see my screen?
Yes,
Yes,
you can.
you can
Your
see
screen.
it.
Can you see my screen? Can you see the screen
You can.
I'm sharing?
You cannot see it.
Yes,
Oh.
we can see it.
You cannot see my screen.
Yes, sir.
I can see your
Okay.
screen, sir.
Oh, you can see my screen.
I cannot see it too.
You can see it.
You can see
You
your
can see it.
screen. Yes.
It could be the
That's
network. Maybe you
I'm
should
telling you.
refresh.
You can see it.
Okay.
You can
But
see
don't
it.
worry. Don't worry. The
Can't
document.
see your
Admin
screen.
is going. Yeah, admin will share the document. You see what is on the screen. I've already said everything. The point I brought out that you should pay attention where the two requirement might come from. That is what is on the screen. I say, can you see my screen? I've already brought it out and I've already said it. Or even all the strategic task plannings, I've already given you all the points. I've already given you. That is what is on the screen. That I say, can you see my screen? I've already said all these points. I've already said new development in accounting, IFRS 18. I've already given you all the points. I've already given you all the points. Now, okay. Okay, so let's continue. Now, let's go to, let me see, what other thing can I quickly mention for our attention? Don't forget I said that by 9 o'clock I'm going to take a break, 30 minutes break. So I'll quickly finish this aspect. I'll take a break. I'll come back by 9:31 to come and continue. If you have not gone to sleep, I'm not going to drag us too late into the night. So we'll stop around 9:30, 9:40, thereabout. Then we'll now continue on Friday. Friday, I won't take break. I will go at a stretch to finish up this case. Don't forget, we still have the calculation. Under the calculation aspect, I have quite a number of things I have done. I would like to show you. So please take note. Now, one of the things, I'm under exhibit 2 now. I want to quickly point your attention to something before I go. Under exhibit 2. Supply, it says IC has now started to supply conventionally to large retail store and supermarket on contract basis. On contract basis. When you supply item on contract basis, the tax implication is withholding tax on the commission that is due to you. That is why I said as soon as you are reading this question, the first question that is going through your mind is that what is the tax implication of this decision? This thing they are doing, what is the tax implication? Because the objective is that you are going to advise your clients about how to minimize tax, so that if the decision that will cost them, that if it is a decision that will increase tax liability, you will say no, don't let us do it that way. Are you getting it? You say no, don't let us do it that way. You understand? So now they told us they are supplying on contract basis. That decision of contract supply, it attracts withholding tax. It attracts withholding, and because it's a limited liability company, it is 10%. 10% commission due on the contract. I want you to take note. I want you to take note. Part of the thing they told us in the question under exhibit 2, they told us that the company, look at it, they told us that some of the store operated from building owned by Spicy. Operated from building owned by Spicy. Now, if you are the owner of the building, you are going to pay land use charge to Lagos State. If the building are in Lagos, you are going to pay land use tax. That is the tax implication if they are owned, meaning their own property. If they are leased property, the government want to see where is the lease agreement, where is the withholding tax and VAT on the lease agreement, where you pay the lease renter, where is the tax, withholding tax on the lease enter. That is the tax implication that is there. So they have properties that are owned by the business and leased property. So you need to look at it. Okay, those leased property, where is the agreement? Where is the withholding tax? Do they deduct withholding tax? Even if they did not mention it in the question, you must say it. You must mention it in your recommendation that there is tax implication of the leased property. There is what? Land use charge they need to pay on the property owned by the company. You must mention it. That is going to be a plus for you, because you are meant to look out for the tax implication of every decision they have written in the question that the company are taking. I'm just looking at some area. Okay, so I'm going to stop here now. When I come back, I'm going to draw your attention. I'm going to tell you another important thing about, they told us a part of the question that the company operated two divisions. I'm going to point you. They say that the division are operated as investment center. I'm going to give you detail about what does it mean to operate a store as an investment center. What does it mean to operate it as a profit center or as a cost center? What is the implication? I'm going to tell you. So we're going to take a break now. I will come back by 9:31 by the grace of God. Then we continue this class. Thank you very much for your attention. See you by 9:31. Thank you. We'll take
Thank
break
Okay,
now.
Thank you,
thank you,
sir.
sir.
Okay,
Another
thank you.
link will be sent to the group for us to join the next
Thank you,
class
sir.
again.
Thank you.
Thank you.
Okay, thank you. Thank you.
Thank you. See you later.
Thank you, sir.
Thank you.
Thank you, sir.
Okay,
Thank
we'll
you.
send another link to the group for us to start the next class when our lecturer is back. So this group will expire in a few
Thank
minutes.
you very
A
much.
new link will be sent to you. Thank you, everyone.
Okay, thank you.